Hey guys, it's Carter. Welcome back to the best investing money management channel on YouTube. I hope you guys are all having a great and an amazing day today. Now in today's video, we are diving in and looking at the top 3 stocks to buy that Warren Buffett just bought. So I hope you guys all enjoyed the video. If you guys get anything in value out of it, hit that like button, subscribe. You guys know what to do because we are nearing 21,000 subscribers. So if you guys are new, make sure you guys subscribe. We talk about stocks, money management, trading, investing, everything money pretty much. Maybe I'll make a merch of that. Everything money. I like that. But we're going to be diving in and looking at all of these stocks. I hope you guys enjoy it. So stock number one is JEF, also known as Jeffrey Financial. We've seen a ton of growth out of the stock in the past year. This is a New York-based company, and they pretty much offer banking and financial services from investing to loans and all that good stuff. Now, looking at the stock, there is some things that I do not like, right? Looking at it here, you'll notice we've seen some sell-off from about 42 all the way down to 36 bucks. On top of that, what we've seen as well is the company has a dividend of 30 cents a quarter, which is awesome. So you'll get some growth, you'll get some dividends to start compounding your account, building up that passive income stream. Their last earnings report beating expectations. They brought in about $1.5 billion and then plus that 30-cent dividend. The other earnings down here, you will notice they missed on the EPS, also known as earnings per share, but did very, very well on the revenue, brought in about $1.3 billion, so they are growing their revenue, which is always a good sign. And then the third, earnings before the most recent, they brought in about $1.7 billion. So you'll notice we've seen the stock actually go from 1.7 all the way to 1.5, so they've lost about $200 million in revenue, which isn't the greatest, right? That's a decline, and I always think it's important to look at stuff like this so you can understand that this company still carries potential, right? Warren Buffett just bought into it, but it's going to be a little more volatile, and what we'll see is hopefully this revenue start turning around, because that's the only thing that worries me about this company here. So moving on to stock number 2. Stock number 2 is LPX. LPX is Louisiana Pacific. Now this company here, they're a building manufacturing company, and what we've seen from this one is a lot of solid growth. If we go ahead and we zoom out, you'll notice it does have that nice and solid upward trend. Really in the past year, ever since all the lockdowns, this stock has skyrocketed from 14 to 78 bucks, and then we've seen some volatility and some sell-off, right? So let's look at the past couple of earnings and see kind of what's going on. So you'll notice a miss on the revenue and the EPS here, which is probably one of the reasons why we've seen some sell-off lately. On top of that, this one here beating expectations, and then plus you'll have a dividend of 22 cents a quarter. That's one thing Warren Buffett loves is dividends. He hates it with his own company, Berkshire Hathaway, but he loves investing into dividend players, because here's a little fact. Dividend stocks are great for recessions. The reason why is because they don't fall as much compared to other stocks, right? People are more likely to hold a stock during a recession when they're paying them cash, which is awesome. So this one here, great growth in a great sector. I think we're just getting started. I think there's still so much opportunity for building, manufacturing, all of that stuff. But I saved the best stock for last. The best stock is ticker symbol TSM. This one here, Taiwan Semiconductor stock. What we've seen from this is a ton of growth. The revenue is up 47% this year. The net income is up. The diluted EPS is up. The net profit margin is 45%, which is crazy. Meaning, for every $100 this company brings in, they profit 45 bucks. This is extremely high. Comparing this to Google or Apple, their profit margin is near 25%. So this here is an extra 20% pretty much on what they make. Great stock. You'll notice though, we've seen huge growth, a lot of consolidation, and then the stock went from 142 all the way down to $72. So this thing is pretty much sold off, half of its market value. Looking at the past earnings report, beating expectations plus a dividend of 43 cents. This earnings missed on the revenue, dividend. This one here, great on revenue, but we've still seen that sell off. I think right now what we're kind of seeing is the whole semiconductor sector really sell off, right? We've seen companies like Nvidia, AMD, Intel all just get absolutely obliterated year to date. So a company like this, that's a smaller startup and is still working, its way, I think is going to be a little more volatile than other ones. But this one here is an absolute baller. They bring in a ton of money, and it's not, so to speak, a startup. It was founded in 1987, so it's been around the block for a while. But it's a great pick here. It's going to be a little more volatile if you guys are going to invest, right? Just the volatility. So understand that this is going to swing your account a little more than maybe you'd like. But volatility often brings what? Opportunity, guys. So I hope you guys all enjoyed the video. If you guys did, hit that like button, subscribe. We'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care.